Good afternoon and welcome to the Phoenix Copper Limited Investor Update. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll. And I would now like to hand you over to the management team from Phoenix Copper. Paul, good afternoon to you.
Thank you very much, Alex, and hello everyone. We've got what looks like a very good turnout. There were at least over 60 people queuing to come in, so that's much appreciated, and it's a good reflection of the retail following that Phoenix Copper has generated. The purpose of today's meeting is to make good on a promise that I made to several investors before the AGM who said, we can't make the AGM, will there be a presentation online? And primarily the purpose of today's meeting is to share the presentation that Ryan, our CEO, gave at the AGM. This presentation is largely about operational matters, and I would really encourage anyone that's got any questions about operational matters to take advantage of our presence here today and to ask questions during the presentation. Clearly, there is a focus, investors have a real focus on the investment that we need in order to bring the mine into production, and I will say a few words about that after Ryan's presentation. But obviously we are always constrained by the rules of the stock exchange about what we can and cannot say, and I'm not going to say anything that is materially new on that topic. What I wanted to do in this webinar is to give an explanation of all the operational work that's gone on over the last 12 months and to give you a sense of the optimism that we feel in the company about the prospects for the Empire Mine going forward. And so with that said, I will hand over in a moment to Ryan. First of all, I will just go through the disclaimer slide, which is the standard disclaimer that you've probably seen if you've watched any of these presentations before, that we're here to inform, but do read the slide and the disclaimer. We're not saying anything materially new, and we're here just to give you information about the Phoenix Copper project. And with that said, I will hand over to Ryan, our CEO in Idaho.
Thanks, Paul. Welcome, everybody. So before I get started on the operational end of this presentation, I know the what's on the forefront, I think, of everybody's mind, and that is the funding for the Empire project in Mackay. So a couple of months ago, we issued a news release that we had signed an LOI with an accredited U.S. investor for the full $75 million that we need for capital for the Empire Mine. Details in that, as we issued in the news release, $30 million initial drawdown, and then complete the investment with 2 additional drawdowns as we need them. This particular this particular investor has been very consistent in their messaging with us. We speak to them at least once a week, if not multiple times a week. They have asked for our patience. They are getting this done. And I want to let everybody know that there's nobody more anxious and excited than the Phoenix team to get this over the line, me included. There might be a few of you on the line there that are equally as excited, but I don't think anybody's more excited than we are. We believe this is a good, sound investor. Again, they've been very consistent in all of their messaging to us, but this is a big deal, so we need to be patient and give it the appropriate time to close. So we'll move on to operations. So in 2024, we issued for the first time in the history of the Empire project a qualified reserve statement. That reserve includes copper, gold, and silver. And for a total of 66,000 metric tons of metal. over an 8.5-year mine life. That is in the open pit, and having a qualified reserve statement is a big deal. Essentially what that means is that the metal in the ground we have shown to be economically viable to extract and sell. So that was quite a milestone for us in 2024. We included an economic model in the PFS. After the reserve was completed, our consultants completed a pre-feasibility study, and a very comprehensive study. It included everything from reserves, metallurgy, environmental. That document is posted on our website, as you all know. I encourage everybody to go through it. It really does. It's an all-encompassing report. Included in that report is the economic model, which basically takes the reserve metal, incorporates all of the operating and capital costs, and gives us an idea of what we can expect for cash flow at the end of the project. And as you can see on this slide, pre-tax $152 million over that 8.5-year mine life. That is a robust number, keeping in mind that the metal prices used for this were significantly lower today. Obviously, gold and silver have increased significantly since this was done. We have not recalculated reserves with new metal prices. We won't do that until we're in the final stages of final engineering, which we hope to be do later this year. But with the metal prices that were used in 2024, this project cash flows very well, as you can see on the screen. So let's talk about how we're going to get there with the mine and the process. And I'm going to make this figure a little larger so I can see it. So the big change or modification for us with the mine and the process was in 2024, when we decided to move from a copper heap leach operation to a milling operation. What that did for us, it makes it easier to recover gold and silver. We maintain copper recovery. At the same time, most importantly, it reduces the footprint of the overall operation. In fact, it reduces it small enough that the processing facility will reside on private property, which is here. This is the private property boundary. And the open pit, in fact, will be on private property, which is here. Very significant in many ways. You can see the distance between the open pit and the process, not very far. That shorter haulage distance, and before, so that everybody knows, the heap leach that we had planned was going to be down in this area. So significant difference. That drives more economic costs. We have shorter haul distance, so we can use smaller trucks, use less diesel fuel, and actually use fewer trucks because of that turnaround time between the pit and the processing facility. So that is quite significant. That change in process design, it has made quite a favorable difference in economics, and I think it will also make a difference in permitting. Agencies like the fact that we're going to use the private property that we have, and have a much smaller footprint on public land. Next slide. So to give you all kind of an idea, if we zoom in, let me back up one. So the area in this next slide is this area here. So what this shows the pit, Actually, there's 2 pits. The milling operation, which again is very close to the pit. Excuse me, the dry stack tailings area and the waste rock facility. This is a very nice, tight, compact operating group, and again, will benefit us from an operating cost standpoint. So let me zoom this up. This diagram is in the PFS, but it essentially goes through the new process flow. Starts with simple crushing, goes to grinding. Here's a picture of a ball mill. We, as everybody's aware, we purchased the ball mills that we needed. They're currently residing in Mackay, but this gives you an idea of kind of what they look like, at least in a cartoon. Ore will come out of the grinding circuit into 3-stage flotation. A copper, gold, silver concentrate will be generated and will be readily saleable downstream of that flotation circuit. The tails from the flotation will go into a copper cementation circuit, which is here, and result in a second saleable product, which is cement copper. This is very simple design, a very favorable footprint. Again, it lands on private property, 100% on private property, and it really simplifies the process in terms of the haulage distance. So let's talk about the roadmap. How do we get from where we are today to where we want to be with the mine in production? So we obviously have to finish permitting, and the permit that we submitted, or the permit document that we submitted for the heap leach, about 90% of that document still applies to what we're doing with this new process. So once we finish the last of the detailed engineering, which again, as soon as we're funded, and we're assuming that'll be, we're hoping that that'll be soon, we can get that exercise done at the end of this year. And the permitting document itself will be as simple as updating the process design and resubmitting to the agency. Once it's resubmitted to the agency, people ask, how long is it going to take? It takes as long as it takes. We have simplified this process. We're proposing to operate mostly on private land, so that should significantly shorten the entire process. We'll talk about construction a little bit. As you're all aware, we've purchased quite a bit of the equipment that we're going to use on the hill, including a full laboratory, ball mills, tails filtration circuit. All of those things are in Mackay. So you can see from the picture on this slide, they're properly staged and properly stored. So they're just waiting for us to really begin construction, and we'll transport those items up onto the hill. Once construction is complete and we're in production, we're looking at about 4,000 tons of ore per day, and that's oxide ore from the open pit, processed through this mill. I'll repeat again, 2 payable streams, a concentrate stream that contains copper, gold, and silver, and then a final copper cementation stream that will contain a fairly high quality copper product. I'll point out, and we'll get into this a little bit further in the presentation, we also have good prospect of additional sulfide ore in the vein system that resides underneath the pit. The processing facility that we're building will be capable of processing that material as well, so we can feed it at the same time that we're processing oxide. What that means is, if we can develop a second ore body in the vein system, that would be developed and wouldn't require the CapEx required for its own processing facility. It could use the one that's already built for the open pit. So the vein system at Empire sits below the pit in a series of high angle faults. It's that vein system that was mined extensively between the early 1900s and 1942. We have a number of U.S. Geological Survey reports from that time. We also have smelter records and sale records for metals pre-1942. So we have a pretty good idea of what the grades in that vein system were, and they reported as high as 8% or higher, with average grades being in the 3.5% to 4% range. Now, this is important. We drilled that one portion of the vein system a couple of years ago with our own contractor's core drilling equipment. We sampled and assayed that core ourselves in a third-party lab, and what resulted were copper grades exceeding 8%. That's very significant in that we were able to confirm the grades that were reported historically. And secondly, the location of those intercepts with the drill rig were a bit deeper and well away laterally from any of the existing workings. And what that means is that metal still exists in the ground. They didn't exploit it or get to it prior to 1942. And it gives us a good target to further underground exploration. It's a known location with copper grades higher than 8%. So we're quite excited about it. We intend to perform that exploration from underground, drive our own tunnel, build our own drill stations. It can be drilled from the surface, but it's not very effective to do so. There's approximately 9 miles of underground workings, drives, stopes, crosscuts, and trying to drill from surface through all of those underground workings to intercept the vein system below those workings is a bit like trying to push a chopstick through a bowl of spaghetti without the chopstick touching any of the spaghetti. It's a challenge. So if we drive underground, we get a pretty clear view of the vein system, and we'll have unobstructed drilling once we get below those old workings. We'll talk for a minute about some of the other prospects that we have. Red Star is located northwest of Empire. We drilled that in 2019, and our consultant was confident enough in that drilling to build a inferred mineral resource, copper, gold, silver again, with some lead, some zinc, 114,000 metric tons, containing, well, you can see all the metal values there. Significant amount of metal for a small underground. This Red Star is probably an extension of the vein system, and it is fairly near surface. So it gives us another good idea of the genetics of the vein system and how it's distributed in 3 dimensions. Another project we have is Navarre Creek. It's primarily a gold target. It sits about 4 miles northwest of the Empire open pit. We drilled it a couple years ago. It's a very, very large area, 4,000 acres. So we tested a number of targets with 28 drill holes. And this is what one of the targets look like. These are not extremely high grades, but they are very consistent, and they have clearly defined this zone here. And once we're funded, we intend to get back to Navarre Creek in time Empire's first priority, but continue to follow up on this. These are all of the targets at Navarre Creek are exciting, and this one in particular. Oh, back to the beginning. So that really completes my part of the operational update. Paul, I'll turn it back to you.
Perfect. Yes, Ryan, Paul, if I may just jump back in there, and thank you very much indeed for your presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the top right corner of your screen. And while the company take a few moments to review those questions submitted today, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Ryan, Paul, as you can see, we have received a number of questions from investors today. And Paul, if I may now hand back to you and kindly ask you to read out the questions where appropriate to do so, and I'll pick up from you at the end. Oh, sorry, Paul, you are muted there. Hold on, let me just turn your microphone back on. Perfect, thank you. All right, Paul.
Thank you. I think a lot of people might prefer it when I'm muted, but we've had quite a lot of questions, and rather than go through them one at a time, because quite a lot of them are on matters that they repeat each other quite a lot. People obviously have common concerns, and some of them are on things that we can't talk a huge amount about. But let me try and take them in groupings, because there are quite a lot of questions about certain recurring topics. I think one thing is, obviously, we've had quite a lot of questions about NIU Invest, who were the investors that we signed an agreement with in May 2024 to fund this project. And as people will be aware, we drew down an initial 5 million from NIU Invest, and subsequent requests for drawdowns were not met with payments from NIU Invest. And so we took the view that we would look for alternative sources of funding, which is what we've done. And it would not really be appropriate to say anything more on that matter. That's really all we can say in relation to that episode. There are a few other questions about the amount of cash in hand that we have at the moment, and they stem in part, and a couple of the questions make reference to this, from a bit of wording in the annual report from our auditors referring to the company's need for cash this month. And the reason for that need in accounting terms is because we have a facility with Riverfort that is due to expire at the end of this month. And it will come as no surprise to anyone that we are in discussions with Riverfort and fully expect to extend that facility. We've always had a good relationship with Riverfort and have used them several times before, and do not anticipate at present any issues in that regard. In more general matters, we have really reduced the expenditure of the company significantly, so we can have as long a runway as possible. Because as Ryan said earlier, we are very confident about the investor that we have, that we've been in discussions with. He's proven to be someone who of his word. He comes with good recommendations. He's doing exactly what he said he would. And in response to one specific question we've been asked, we probably did make an error in suggesting that the transaction would be tied up by July, because that was simply something that was not in our control. We thought in good faith that it would be, but I think we've learned our lesson, and we're not going to place timescales on matters that we cannot control anymore. So all we can say about the investor is to reiterate what Ryan said earlier and what I've just repeated, that we're very happy, we're very confident. He's saying all the right things, but we're not going to speculate on when the documentation may be signed. One other just general point, which I've been asked a question about the cost of the copper bonds. They are linked to the price of copper. And so from our perspective, the best thing that could happen to the price of copper is that it stays at a good level until we've got our investor fully signed up. Then we're quite happy for it to drift until we're in production. And then we'd like for it to go through the roof once we're in production. So, I know a lot of our investors possibly look at the price of copper, every day. And really, it's relevant to us, of course. We're going to be a copper producing company. But it's not something that we want the price of copper to fly away at the moment, because the interest payments that we make will be linked to the price of copper. There was one question about the exploration costs for if we were to drill into the sulfides, and Ryan can probably answer that more fully than I can, but my understanding, and Ryan will correct me, I'm sure, is the most important thing when you're doing any sort of exploration like that is to allow more money than you think it's going to cost, so that you budget an amount that you are sure that you are going to be able to complete the project within. So I think, as a general rule of thumb, if we would be looking to allow something in the region of $5 million for the cost of drilling in and out of the adit, hoping that it would actually cost a little bit less than that. I don't know if you've got any words on that, Ryan, or any views on how long that drilling into the adit would take.
Yeah, well, firstly, the part of the $75 million investment package with this U.S. investor, $5 million of that $75 million has been earmarked for exploration of the vein system. Because we haven't driven a tunnel on the property in the past, we don't know exactly what to expect as far as ground control goes, although because the existing workings seem to be standing up quite well over time, we wouldn't expect a lot of problems. But $5 million should easily allow us to advance a tunnel, build multiple drilling stations, and kind of initially drill between 10 and 15,000 feet of core in multiple directions from those drill stations. So it will be a significant exploration exercise.
We have received another question relating to the processing facilities and how the sort of schedule expected for them. And it touches on a couple of issues. First of all, it refers to the expectation that we may be able to use used equipment for some of our processing items. And then it asks about the difficulty of perhaps incorporating those within a full scope EPC, and asking whether we have a preferred contractor, and whether we could give a little idea of the schedule for the whole process, really, of going from design to commissioning. I suppose the first part of that is in relation to used equipment and the degree to which the project, as now designed, largely uses standardized equipment is my understanding.
That's correct. So when you consider that this will be about 4,000 tons per day, with the processing facility being sited very near the pit, we'll talk about rolling stock first. Our engineers have told us that we can use articulated 45-ton haul trucks, which happen to be the most commonly used haul trucks in the general construction industry in the U.S. So they are readily available. Again, our consultants provided us with a complete capital items list That was in 2024. We went through the exercise of locating all of the items on that list. The ones that we intend to purchase used are all purchasable within about 500-mile radius of Mackay. Again, it's very common equipment. For those of you who are interested, we're not going to spec used equipment for everything. We're going to purchase new pumps, piping, things like that. There are some pieces of equipment that it's very important arrive new and that we construct new. But yeah, we have determined that procuring this equipment is not going to be a problem because of its size, and it is all located very near Idaho. And as far as piecing it together, that's why we hired a good engineering firm to put that whole plan together. So they ensured for us that all of those parts and pieces, if purchased the way that they designated, will essentially fit together and be functional. And we wouldn't do it any other way. There's no sense in building a mine and a processing facility and commissioning it and having it not operate.
No, and that goes in a sense to a question that we've had. Someone's asked, what budget for 26 do we have for the non-Empire projects? And there's another one in relation to Navarre Creek and, what the plans really are for there. And I think you've answered that in the sense that in the 75 million, we've got an allowance for the exploration into the sulfides. But other than that, our focus at the moment is solely on the Empire Pit, that Navarre Creek is a project for the future. Red Star is a project also for the future, but not as far away as Navarre Creek, which is much earlier stage. But assuming we get the funding away, which, as I said, we're very confident about, then the focus is entirely on Empire. We're using that funding to get Empire into production, and we're going to be laser focused on that.
That's right.
So one question which should be easy to answer is, has anything changed in the price of equipment in general as a result of Donald Trump's commandment that to dig baby dig?
Well, I think as everyone's figured out, the current administration and all the things that they're doing, prices are up, down, and sideways. As far as used equipment goes, no, prices over the past year have not changed significantly. I noticed one question that was pre-submitted talked about the pre-feasibility operating costs that we put together in the cash flow, how those have changed over the year. That's a very good question. Really, the three most important operating costs to keep in mind are diesel fuel, labor, and sulfuric acid for the cementation circuit. Diesel fuel in the past year has actually gone down in price, about 30 cents. The price of acid has increased 0.2% over the last year, and labor is largely unchanged. The fourth thing that I'll mention is electricity. We're fortunate that in Idaho, majority of the electricity generated here is from hydroelectric. So we never see very large bumps in electricity costs. We will also be the benefactor of a commercial utility rates. So electricity has not increased significantly in the past year. So to answer the question about impact to the cash flow model, yeah, sulfuric acid's gone up a little bit, but keep in mind that cash flow model, as I mentioned before, was based on much lower gold and silver prices. And in the past year, as everyone's aware, the price of gold and silver has skyrocketed. So we will easily make up for the increase in any of those operating costs.
Good. And there's one question which I think is a variation of a question a lot of people are asking, which is, should all go well with funding, when do you anticipate being in production? And I think that was covered in one of the slides earlier, but I will say a few words on that. The first thing is that we are a bit sort of once bitten, twice shy about giving timescales, because often we're not in control of them, and people have criticised us previously for being over optimistic. But the question asked, if the funding comes and in a reasonable case scenario, our real target, immediate target this year is to get our permit application in before the end of the year. That we need to get a bit of funding to engage the various consultants that we have working for us, and they're excellent consultants, get them to work up the current model into a final plan of operations, fully written out engineering plan, which isn't a huge amount of work, but will take a little bit of time. We want to get that application in by the end of the year, give the authorities time to look at that next year, and we would be hopeful that we would get the permit back, be fully permitted next year. But there's no guarantees about that. That again, that's a process that depends very much on what the response to the public consultation is. One of the questions actually specifically asked about the views in Mackay towards the mine, and I think it's fair to say that they are very positive in the local community, that we have done a lot of work with the KCAT initiative to support the local community and to explain what we're doing. And Mackay is very much a mining town with a mining heritage that would welcome the economic opportunities and the jobs that Empire could bring to the community. It could be really transformative to the town, which currently the restaurant there, the bars, they are on very reduced hours. It needs a bit more economic activity, and I think all the locals would encourage it. So it has a lot of local support, but that there's no guarantee that that translates into getting a quick permit. I mean, there's lots of reasons why this project should be permitted, but that's just something that's out of our control. And among those reasons why it should be permitted are the bits that Ryan was referring to earlier about the size of the footprint for the operating, for the processing, which is now very small and almost entirely on private land. So really, from a permitting point of view, the focus is largely going to be on the tailings and the access road. And there's no reason why the permit shouldn't be obtained next year. But until it's there, we don't know who might object and on what terms. But assuming that happens, we're looking at coming into production in 2027. And that's the sort of the realistic target, but it comes with all those caveats. And those caveats aren't me looking for excuses. They're just being honest about the things that we cannot control. What we need to control and what we need to make sure happens is that we get that permit application in as soon as possible. I don't know, Brian, whether you've got anything to add to that, but
no, I think you summarized it very well. The federal permitting process moves at the speed that the agencies move. And
yes,
our team will ensure that any questions that are asked by the agencies are answered quickly, and that we're always available. But certain portions of that process we cannot control.
Yes, exactly. Now, again, we've got a few questions, several questions about has the investor made a site visit yet, or when that might happen. And the simple answer is that that we do not know if the site visit is necessary. As I say, he's been introduced to us by someone who knows the company well and who has been on site several times. It is something that we put in the AGM as one of the things that we expected to happen. But actually, it's something that I think investors, and I fully understand this, why investors, because we said it, investors have attached a lot of importance to it, but it is not something that we think is material either way. That that he may say, I want to come and visit the site before signing up. He might not. He might be happy to rely on the fact that the project clearly exists and other people have seen it, and he's got all the video and photo evidence. So I'd just say it's something that people really should not need to be hung up about one way or another. But we have had a lot of questions about it, and I think the company has to take a little bit of the blame for perhaps suggesting that the site visit was one of the conditions precedent. It may be, it may not be. As Ryan said earlier on, the investor has always said to us he has another project which he has undertaken to his investors he will complete first before moving his attention fully onto Phoenix. That project is now, we understand, close to completion. There was actually news in the public domain last week in relation to that project. And he will, in due course, move his attention fully to Phoenix. But whether that's, this week or next week, whether he needs one site visit, 2 or 0, is just, I don't think it's particularly helpful to speculate too much about that. I think all we can say is that we are in frequent contact with him and feel very positive about the relationship. Again, we've been asked quite a few questions about, what else can we tell you about the investor? The answer is not a great deal, but he does have a lot of experience in projects of this sort. Finally, we've had a few questions about various plan Bs if the investor doesn't work out. We're always looking at plan Bs. We are always looking at the options available to us, and in particular, we are looking at options that do not involve equity issuance. That the last thing we want to do, and again I say this because people have raised the concerns, is to have issue shares at the current level. That sort of ties in the sense the question that we've had now: why is the share price so low? It's chicken and egg. The share price is low because obviously I think there's an excess of speculation about whether we will or will not get funding, and this has obviously been going on for a couple of years, so I fully understand why people are nervous, but we just need now to let this play out. As I say, we're confident. Can't say that too many times, but that's the truth. I'm just looking through. The questions seem to be coming as fast as I speak, so I'm just going to take a moment just to make sure that we've said everything that we can say. I think one important point is that we are keen to communicate to investors, and I accept that we've been a little bit lax over that in the last couple of years. And it's a bit chicken and egg that at the time we're talking about funding all the time. Those conversations are obviously both market sensitive and confidential with potential investors. So, it's just important to appreciate the fact we can't talk about these things doesn't mean that we're being secretive or that we have anything to hide. It's just the rules of the market. And it's much easier for us to talk about operational matters, and then we can talk about the funding when it's done. Right. I think that's pretty much it. There are 51 questions there, and I think we've answered pretty much all of the ones that we can do. Oh, there is one actually that's just come in about that. Do we still own 80% of Empire? And if so, will the minority interest be able to raise their share of the required funding? So, Ryan, you're probably more up to date with me on this, but what's the position there with that the 20% interest that XGen have in that?
Phoenix still owns 80% of the project. That has not changed.
Yeah. So that's it, and I think we're looking to raise we're looking to raise enough money to bring the project into production. That's the key thing, that we're not going to find ourselves in a position where we've got 80% and we haven't got the 20%. So we're looking to raise the full amount, and then we will sort it out, the corporate structure later on. I mean, our aim, let's be clear, is to bring Empire into production using the bond financing that we think we are, on the cusp of securing.
That's great, Paul. Ryan, thank you for addressing those questions from investors today. And of course, the company can review all questions submitted today and will publish those responses on the Investor Meet Company platform. But Paul, before I redirect investors to provide you with their feedback, which I know is particularly important to the company, could I please just ask you for a few closing comments?
Yes. I mean, first of all, thank you very much to Investor Meet Company for giving us this platform, and thank you all for attending. It's been a very good turnout, and I hope that you found it a useful session. 2 points that I want to make is that, first of all, the reason for this, as we said in advance, was to make good on the promise that we made before the AGM. And the second one is that I know it's in the nature of investors to worry, but I want you just to take away the fact that we've been in discussions with this investor for some time. As Ryan said, we talk to them all the time, and we are very positive about it. We think this is an exciting time for the company. We clearly need to finalize arrangements. No one's disputing that. But if we can do that, and we feel positive about that, then really we are at the cusp of a new dawn for Phoenix, and potentially, an exciting few years. So hopefully we've managed to convey some of that enthusiasm and excitement to you.
Paul, Ryan, thank you once again for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Phoenix Copper Limited, we would like to thank you for attending today's presentation, and good afternoon to you all.